Hey guys, what's going on? Just going to do a quick update here on Algorand. Ticker for this is Algo, and right now I'm currently on the weekly time frame. A couple things before I get started. First, if you're not subscribed and you want to get notified when I drop new content, click subscribe, click the bell, click on all. Also, if you want to please do trade Algorand and you don't want to have to go through an annoying KYC process and submit your personal information, you can head on over here to BloFin. Link for that is in the pinned comment and description. And if you sign up using those links, you're going to activate a sign up bonus. Even if you're not actively day trading right now, it's probably good to lock in accounts on some of these exchanges like BloFin, for example, that do not require KYC, because in a few months when you want to take profits and swap into stable coins or whatever you want to do, or move your altcoin profits back into Bitcoin, it's good to have a few exchanges that you can use that are going to retain your privacy, right? So what I've noticed is that a lot of these exchanges that start out with no KYC, eventually they end up implementing it. However, a lot of the times they'll allow people that already have accounts on the platform to continue to trade without having to submit ID, at least for quite a while longer anyway. All right, let's get back to the chart. Right now, Algorand, I've gone over like the entire history of this chart several times in my previous analysis videos, but just to do it very quickly, we have this impulsive move up, we have this correction all the way back down to the 8-9 cent range, and this chart is a perfect example of why you need to exit the market during the bull run, because most of these alts are going to crash back down 98%. But anyway, this correction took the form of a falling wedge. We've since broken out of it. The measured move breakout target for this falling wedge, what you do is you just measure the widest part. So we can measure from there to here. And then you project it from the breakout point. So as you can see, we recently came up to the measured move breakout target of this falling wedge. But the reason why the price is struggling where it is right here at this line is because that's a Fibonacci resistance. So we'll take a fib. This time we'll run it from the high all the way down to the low. And that's going to give us these levels which the price is responding very well to, okay? So you see where we got rejected right here with this wick, that is the 382 Fibonacci retracement level. After this rejection, we came all the way back down, retested the lows, and on the following impulsive wave up, we made it up to the 50. And these are weekly candles, so while you see this wick poking above, by the time this candle closed on the weekly time frame, we closed back down below this 50% Fibonacci resistance level, which coincidentally is around 50 cents. Okay, so we are getting a recovery today in the market. Pretty much all the coins are up across the board. But if tomorrow we see a continuation of this breakdown, then the first place that I would look to as support is going to be this 382 Fibonacci. This time we broke right through it after getting rejected here back in March. But if the price does come back down a little further, I would look to this 33 cent area as a potential level of support. But beyond that, if the price comes further down, this is where I would personally be opening a large position, and that's going to be around 28 cents. And that's going to be based on the support and resistance level right here. So you see this level was support here. We broke below it, came back, it was resistance. And then when we made it back up to it again, it was resistance once again. Okay, so a lot of price history right here, again around 28 cents. Now, based on this long wick and how buyers seem to be stepping in, I'm not so confident we make it down there. But if we do, that's an obvious trade setup right there. So I would be looking to long this 28 cent level all the way up. Even if you took this long at 28 cents and you sold just basically where we are right now at 49 cents, that's going to be a very good return. But because this is a bull market and we are trending upwards, I would expect the next push up will break this 50% level and take us all the way up here to the golden pocket. Okay, and the golden pocket is just the range between the 618 and the 65% Fibonacci retracement, and I have that starting at around 76 cents. And the top of that range is about 85 cents. So between 76 and 85 cents, that's where I would expect the next resistance level to be if we're able to crack this 50%. Beyond that, of course, we have the 786 all the way up here at around $1.38. And based on how the price has been responding to these Fibonacci resistance levels thus far, I would expect some selling pressure to occur up here at the 786 if we do make it up there anytime soon. But you see here rejection at the 382, rejection at the 50, likely rejection up here at the golden pocket, and then rejection up here at the 786. That's how I would expect it to play out. But the pullback after getting rejected at these levels, I'm just viewing this as like a staircase up to higher targets, right? So I'm not expecting the price to just collapse all the way back down. I think we are in, what's considered to be an altcoin season. So enjoy it while it lasts. And speaking of that, let's go over to the total 3 chart quickly. And if you follow me on X, you likely would have seen me post when we got up to the top here that I think there's going to be a pullback on altcoins. And that's just because if I zoom in here, the candle body closed under the resistance. Probably get a better look at it on the daily time frame. Yeah, you see here, we couldn't get the candle body close above here. So pullback seemed natural and expected. From there, we did pull back quite a bit from 1.14 trillion all the way back down here to 984 billion. But as you can see here on the daily time frame, this previous level of resistance has held up as a support. We pushed down right to this support level for 2 days, and both times buyers stepped in to defend this level, and now we're heading back up. Now what you want to see here obviously is the price to come up and break this resistance, okay? This resistance at 1.14 trillion. That's huge. If you start seeing the price weakening here, then this is going to be a corrective move, and further downside will likely follow. And if that happens, if we do end up breaking this daily level of support at 933 billion, the next level down is going to be this green line based on the weekly time frame right here, the top of these candle bodies. And again, that's going to be around 825 billion or so right at this green line. So definitely mark this on the total 3 chart just so you have an idea. So I would mark this level here based on the daily, this level here based on the weekly. And once again, for that daily level, just come here, take a horizontal ray, paste it right at the top of these candle bodies here. And this is a key level to watch. And again, of course, I'm hoping that we're able to push back up and break above this previous level of resistance at 1.14 trillion. However, if we don't and we see a failure in that move, then yeah, I may attempt to take a trade off of this 932 billion level with a very tight stop loss right under these wicks right here. But if that breaks, I'm looking at 825 billion. But once again, I need to stress that that's not what I expect to happen, right? I do think we're going to end up breaking through here, just given where we are in the historical market cycle. Okay, so back to Algorand. Quick summary, getting resistance at the 50, not surprised. If over the next few days the price pulls back, you can look for the first level of support to be around 33 cents, and beyond that, where I would personally look to go heavy in this is around 28 cents. If we continue up from here, break the 50, just mark this level, the golden pocket, by running a Fibonacci retracement from the top down to the bottom. That's going to give you this zone. You may have to manually add the 65% if you want that on your chart as well. But up here is where I expect the next resistance to be if we're able to break through the 50. And once again, that is around 70, I'd say around 76 cents up to 85 cents. Okay, so that's a quick update on Algorand. Obviously, this is a very bullish structure. Bit of a W reversal formation right here. And I do think we are on the way up to much higher price targets. All right, guys, hopefully you found that helpful. Once again, if you want a place to trade this, head on over here to BloFin, links in the pinned comment and description, and using that link is going to activate a sign-up bonus for you. Again, no KYC. Also, if you found this video helpful, click a like. If you want to get updated when I drop new content, click subscribe, click the bell, click on all. And yeah, that's about it for now. Take care, guys. Have a good day. Bye.